At Paris Financial, the tax champions, we have an enormous amount of clients who are trying to grow their passive wealth through property investment, and some do property development as well. It's a big thing in Australia, isn't it? Especially with the growth of the property market, and yeah, something I do myself. So it's a bit of fun, and it's a good way to try and get ahead. If you're in small business though, a growing small business, you've got to take a different attitude to property investment, especially as it regards asset protection. So someone working in one of those big buildings in the city, maybe they're on over 100 grand and the main breadwinner of their family working for a big company, they will often develop their property investments, like all of us, with negative gearing. So they'll offset the net loss on their investment property against their high income, and the tax office will give them a break. And I'll just show you just the basic setup of this. Most of you will know it, but for those starting out, this is how it looks. Classic negative gearing there with the rent. The interest and the expenses are more than the rent, going into negative, and you've got a $5,000 tax loss there, which you put off against your tax, and the tax office will give you back the $1,500 cash there. Standard negative gearing. And that's what you'll be doing if you're a high paid employee and the main breadwinner. In small business though, a key asset strategy and asset protection strategy is to set up an investment trust outside your main trading trust. So that investment trust is what buys your investment property. You need to do that because you cannot have it in your name as the director of the company who's running the business, and you can't have it in the non-business person's name because you'll start to get hit later on by capital gains tax. So you set up that investment trust. The investment trust has that loss I just spoke about of $5,000. So it has rental on the investment property in that investment trust, the interest, the expenses, and you end up with that loss. Now, trusts cannot claim losses. All right, you can't claim losses on tax. They need to be carried forward. So the key strategy for small business is to direct some of the profit from your trading trust or successful business and offset the negative gearing or that $5,000 loss in the investment trust. So there you have it, folks. Asset protection, having the property in that new investment trust, it's making that $5,000 negative gearing loss, send some profit from your profitable business, offset the loss, and voila. Asset protection, fantastic tax strategy, and other hidden ingredients. Defence wins premierships, folks. Set up your investment trust when you're starting to develop your assets in small business. Catch ya.